Hi there, I'm verified champion trader Kevin Davey, and today I'm going to show you an algo entry that actually works. So let's get started. Before we get started, if you're not on my free email list for algo trading information, well, you should be. Just hit the QR code, type in the address you see on the screen, and you'll get signed up and you'll get this free mini S&P algo strategy. So in this video, I'm not going to be giving any sales pitches, but I am going to show you an entry for algo trading that works on different markets, different bar sizes, and I'm going to show you exactly where it works. And that's based on my testing. So it's not just me looking at a chart and saying, oh, this looks good. It's actual data behind this. And this was developed as part of my strategy factory process that I use to develop strategies. What I'm doing today is giving you the results of a modified version of this limited testing that I do. So it's one step in the overall process, but I think it's a nice step to get you started with your own entries. So this entry works, and it can be part of a strategy that you could develop. Now, you've probably seen a lot of magic entries out there and people telling you about their secret indicators. I love the ones that talk about it was hidden in a trunk in an attic of my grandfather and it revealed all the secrets of the markets. That this simple indicator that he used to calculate by hand. Just ridiculous stuff. Okay, this webinar, this video is different. I'm going to give you specific markets, bar sizes that work, and by work I mean it gives profit over a wide range of input parameters. Okay, and it works over the last 5 years. So to get to this point, I had to go through a lot of garbage first. So I tested a whole bunch of entries. This is one that worked. Obviously, I don't show you the ones that didn't work because what's the point? But you can make the assumption that most entries don't work. If all the entries worked, if everything worked that you tried, one, you're probably testing incorrectly, and two, everybody else would probably be doing the same thing and finding all these things that work. So finding entries is not always that easy. I tested all these as just stop and reverse. You're either long or you're short, and the only way to get in or out is by a signal from that entry. So the entries also become exits of the opposite position. No stop loss, no profit target, because those sometimes will interfere enough with your entries that you can't tell if you've got a good entry. Well, if you like what you see so far, you're going to love my free algo strategy and more trading information. Just hit the QR code or type in the address you see, and you'll get signed up to my email list and get lots of free algo trading information. I ran 44 different futures markets, 8 different bar sizes, and I did a 5-year test. Altogether, I'm guessing probably over 500,000 back tests. A lot of back tests to get to this point. So it's not something that you can just do in 1 minute. It takes a little while to do this, especially when you have to test a bunch of entries. But what I'm giving you are the results of that research. This one, I call it counter trend momentum because it's going against the longer term momentum. So I have 2 momentums I'm calculating. One, a long term, like say maybe 100 to 200 bars, and the other one is short term. So if the long term's down, short term is up, and the ADX says, hey, there's a trend, and the RSI is above 50, that's when you go long, vice versa for short. Now, if you don't know what ADX and RSI are, those are indicators, technical indicators that have been around forever, but you can go to Investopedia and learn about those because they're kind of interesting. They have their place. They don't work everywhere, but sometimes I do find them pretty useful. So here's the code in TradeStation format. I have the buy rule and up top and then the sell short rule down below. And you'll notice I'm saying input variable 1 is less than input variable 2. So if input variable 1 is the short term, that means input variable 2 is the long term. Okay, so let's go walk through this rule. ADX, the 14 period ADX, that's just a standard number. I think originally maybe somebody said, well, that's 2 weeks, but it's not, because if you're using daily bars, 10 days would be 2 weeks, so it should be a 10. I don't know. But anyways, the RSI and ADX usually have a default value of 14, so I just left it. If the 14 period ADX is greater than 20, that indicates a trend. If the RSI is above 50, I like to use above 50 and below 50. That also tends to show a long bias, at least in this case. And then the short-term momentum is up. That's close is greater than the close input var 1 bars ago. And the longer-term momentum is down. Then you buy the next bar. So you're buying some short-term strength that's also long-term down. And vice versa for the shorts. Okay, so here's an example trade with gold, and you can see when it's going short, there's this downtrend, so it's buying that short downtrend, and you can't really tell here, but the longer term momentum is up. Try different values of those two lengths, the short and long momentum. 49 iterations in all. 49 different combinations. So maybe I did 200 bars and 10 bars. That would be one combination. 200 bars and 15 bars would be another. I think you get my point. And what I'm looking for here is on all 49 tests, I want to see a majority of those 49 give you profit. And that's kind of a tell. If enough of them are profitable, then you could say this might be a good entry. Boy, that sounds wishy-washy, doesn't it? But that's all I'm looking for. I'm just looking for some general guidance that, hey, maybe this entry could possibly be part of a good strategy. Maybe it won't. You don't know. But this test is a nice test to run because it kind of gives you an indication how things might be. And if all 49 of those iterations lost money, I'd probably say this entry's garbage and I wouldn't do any more testing with it. So let's look at the results. A 1 in this table means it passed and it was profitable in that particular case. So look at the top row. It says corn, 1440 minute. It says a majority of those 49 iterations I ran were profitable, so that gets a 1. And you can see it works in a whole bunch of different markets. It actually worked the best with the 1440. There's a typo here. The 1440, which is basically a daily bar. If the session is shorter than 1440 minute bars, 1440 minutes, which it would be for corn, just as an example, it would just be the whole corn session. But you can see it passed in a variety of cases. So that gives me a little confidence that, hey, maybe there's something here and I should test it further. Here's a real strategy I actually developed with this particular entry, and it's the Nikkei stock index, which a lot of people don't trade, but hey, if you find a strategy for it, it could be useful. And you can see that looks pretty decent. It has some drawdowns, obviously, but that's not bad. Now, one thing you might have noticed here, the entries are pretty simple. Okay? And things like simple momentum, RSI, ADX, they can work. There's not a lot of rules and filters in this. And if you look at some of the other videos in this series, you'll see the same thing. I try to keep things simple. And I also try to keep things symmetric. So I have one rule for going long, the exact opposite for going short. Why is that? Now, some people say, oh, hey, the down a bear market will act differently than an up market. That could be definitely true for a lot of markets. But what I found is when you start having separate rules, long and short, or separate parameters, you start to get into curve fitting a lot more. And curve fitting to me is the biggest thing to avoid. Now, entries, that's all I've talked about here. They're important, but just remember, it's the whole process to develop a strategy that's what's really important. I use something I call the Strategy Factory. It's a trademark name for an approach that really nobody else out there does the way I do it. And the cool thing, it works for my own trading, it works for students I've worked with, and it's worked on millions and millions of back tests that I've run. I bet you I've run probably 1 billion back tests over my career, and this process tends to create strategies that yield good real-time results. That's different from saying it creates great back tests. And if you don't understand why, watch some of my other videos. I think you'll understand. Now, that's my process. Could you do your own process? Well, absolutely. That's what I did. I developed my process through trial and error over a number of years. You could do the same thing. You take a whole bunch of strategies, 500 to 1,000 strategies. You build them all the same way, and then you watch them in real time for a couple of years. See how they do. If they do well, there's your process. But if they don't do well, then you go back, you change your process, you run it on more strategies, and you keep doing that until you come up with a process that yields good real-time results. That's the key. You want good results after you develop the strategy. But you can certainly do that yourself. You can also follow the approach I've done. A lot of people do. All right. Well, thanks for watching. I hope you enjoyed this entry. Good luck testing it. I'm Kevin Davey. Have a great day.